Welcome to Stock Talk with Nico Criticos. Today we're going to be going over Snowflake stock and doing an in-depth analysis on the fundamentals of the company, as well as if the stock price is in a healthy place or not. So first thing I want to point out is if you're not subscribed already, I'm going to be doing a contest or raffle sort of thing where I give out some prizes once I hit 1,000 subscribers. So keep that in mind. But Snowflake is a stock that is a cloud data company, and this stock is probably one of the most rich trading stocks in the stock market. At least it was a couple months ago, and now it's come down a lot, but it's still at a very rich valuation. So Snowflake was trading at $400 a share a couple months ago, and now it's $192. So it's down more than 50%, and it's still, this company is now worth $59 billion. So what we're going to do here is we're going to start off with another way to think of this company would be, it kind of reminds me of Palantir. As I was reading through the 10K, it sounds a lot like Palantir, but they're actually growing more than twice as fast than Palantir, and that's why that valuation is so rich. So the way they describe themselves is, our platform is built on a cloud native architecture that leverages the massive scalability and performance of the public cloud. Our platform allows customers to consolidate data into a single source of truth, to drive meaningful business insights, power applications, and share data across regions and public clouds. So it's similar to what a lot of other cloud data companies are doing. But the thing that makes them different that I don't see very often is that their business model is not like a SaaS business model. It's not software as a service. It's consumption based, which means that their customers only get charged based on how much they use, how much they consume. And that's the difference here. A lot of these companies out there like Palantir or I don't know, there's other ones. I think there's tons of other data cloud companies that will charge as like it's like a subscription, like a monthly thing or a yearly thing, right? But Snowflake, as of this past quarter, they did $359 million in the last quarter, and which was over 100% year-over-year growth, which is quite amazing. There's not many companies out there that are doing that. They have around 6,000 customers, and as I said, they have a consumption-based business model. I believe, let's see, for the whole year of 2022 or 2021, I mean, they did. Let's see. Well, they don't have it up here yet. I believe it was. Let's see how much revenue they did. I want to see. Yeah, it's not a lot. It's $1 billion. Okay. So $1 billion of revenue for the trailing 12 months. And this company is trading at $59 billion. That's a lot. But let's keep going. So next up, we'll choose my checklist. We can see, is the stock down? Yes, it's now down. It's actually down more than 50%. Revenue as we've seen, it's been growing super fast, right? So that's going to get a yes. However, net income, not looking as good there. Wait, we need that. So we go to, let's see, if we go to their revenue and net income, we can see that, so revenue grew 100% year over year, right? This year it's expected to grow 65%. But as you can see, so net income is, look at revenue. Revenue has pretty much more than doubled every year for the last 3 years. But net income has gotten worse, right? They lost $679 million this past year. So net income is getting worse. As with most companies in a space like this, they're growing. So they're spending a lot on sales and marketing, and they're hiring more people. So, they're acquiring companies as well. All those things are a lot of cost to a growing company. And they're probably so focused on just getting more customers and growing revenue that profitability really is not a priority for them at the moment. If we keep going here, we can see that their price to sales for 2022 is 29. So they're trading at 29 times sales. Because I think that they're expected to do, let's see, probably 1.5, 1.6 billion, no, 2 billion. They're expected to do $2 billion of revenue this year, $3 billion of revenue next year. So they're growing super fast. But that's still a price to sales of 29. Okay. But for 65% revenue growth, it's kind of understandable, right? As far as the price to earnings ratio, it looks like it's going to be about it's over 1,400 based off of this year's metrics. So that's going to get a no. Doesn't look too good there. Is this company innovative? Do they have a moat? I put yes, they are innovative, because once again, they're using the cloud to collect data, right? And as far as a moat goes, I looked at their 10K. They listed off some competitive advantages, but that is I don't know if I could honestly say that I think they have a strong moat, because think about all the companies you have in this space. So you have Palantir, right? Then you have other companies like Splunk and Datadog doing similar things. But I think the big dogs are the big threats. So that's Google, Amazon, and Microsoft, right? Those three cloud companies, those are the ones to look out for, because those are, they pretty much, they control so much of the market that those are big threats in my opinion. Next up, is it a growing industry? Yes, it's definitely a growing industry, right? And this isn't to say that this company can't maintain, a decent amount of market share. All they need is, even if they can have 5% market share, that's still going to add up to billions and billions of dollars for this company, because the cloud space and collecting data to get new insights and give that valuable information to businesses in order to have them make better decisions and have them make more money ultimately. That's going to be an ever growing thing, right? That's not going to, I can't, like, looking years out, I can't really picture a time when that's shrinking, because the cloud's not really going to go backwards. It's going to go forwards. More companies are going to use it. More companies are going to need more storage. So I think there's plenty of demand out there for services of what they offer. Return on invested capital and margins are going to get a no. They're negative. Healthy cash flow, though, this is something interesting, because even though this is a good example, even though a company is unprofitable, they can still have good cash flow. Okay, that's the difference. So yes, this company is losing money. However, the cash flow looks good. It's the cash flow is healthy and looking strong. So let me show you what I mean. If we look at operating cash flow, okay, we can see over the past couple of years, it's gone from negative 176 million to then negative 145 million. And then the trailing 12 months, they're up to 50 million of positive operating cash flow. Okay, that's a huge improvement. Not only that, look at their end cash position. Okay, end cash position has gone from 100 to 140 to 800 to 900 million dollars. Now, part of that is probably because of the amount of more shares that they issued, right? They did more rounds of funding, and so that's actually a negative. We're going to come to that one in a little bit. That's further on down the checklist. Their share count is up 80% year over year. And then the other thing that doesn't look good here is the free cash flow, right? Their investing cash flow is taking out a lot of money, right? $3 billion when you only did 50 million in positive operating cash flow. That's kind of too much, but it is what it is. It's a growing company. It's something it's a risk you got to take. And then we have diverse revenue streams. They do have multiple different like packages and stuff, right? You could read it in their 10K. They have multiple different packages of what they offer to different businesses. Main reason I put yes here is just because I think the statistic was like, out of the Fortune 500 companies, they have like 180 of them as customers, and it only accounts for like 27% of revenue or something like that. So that's pretty good. That means that means their customer concentration is in a healthy place, and that means they're not too reliant on one company for revenue, which is a good thing. Next up, we have the balance sheet. If we could take a look at the balance sheet here. Yeah, so free cash flow, I don't know. I almost want to give the cash flow line a no almost, because I don't know, free cash flow doesn't look good, and they're spending $3 billion investing into the company when you only make 50 million in operating cash flow. And then on top of that, you're diluting the shareholders, raising more money to increase that cash position. I mean, that's just, I don't know. And with that combined with the insane valuation on this company, it's kind of, I don't know. It seems it's too much for me. I wouldn't want to invest in this. But anyways, equity over the past couple of years has gone from negative to now over $5 billion, which is good. That's a good sign. And if we look at assets and liabilities, we can see they have much more assets and liabilities, both on a short-term and long-term basis. So that's good. And then finally, I gave them a no as far as what their equity is relative to the market cap. This is once again, what, $58 billion valuation, and they have $5 billion of equity, right? So that's less than 10%. That's not that good. That's not that, I don't know. It's not horrible. A lot of companies trade around this mark, but I wouldn't consider that I wouldn't consider that a large amount of equity relative to the market cap. If you're paying 58, you're going to pay $58 billion for a company that only has 5 billion and it only makes $2 billion a year in revenue. That's, I don't know. It doesn't seem like a good deal. And finally, next up we have strong share buyback. As I said no. It's increased more than 80% year over year. We can see here 81%. So that share price is probably not going to see $400 again for a long, long time, right? If it was going to trade this valuation, if it was going to trade at, so let's see, at that point it would have been trading at $120 billion valuation. That's insane back in November. So, oh wait, no, it would have been less. It would have been more like 100 maybe. I would think so, yeah. So in order for it to get back to that stage, it's going to be a lot harder for it to get back up. That's all it is. That's all it's going to be now, because they issued so many more shares. And then as insiders interested, insiders own 11% of the company. Okay. And but the problem is that look at these for the past what, 9 months at least, we've only seen them selling. They haven't, I mean, it's kind of understandable. I'd probably be selling too if my company was trading at a price to sales of 100. But even in these past couple of months, you can see they're not interested in buying it, anywhere around $240 or $200. The last time they were buying was back in June at 240, right? So I don't know. That's not a great sign either. And then finally we have, is it founder led, or do they have a good team with them? And I put yes. So here we have their team. Okay. And if you read the bios on these guys right here, just these first 3 or 4 executives, this guy is a co-founder, right? But they've all either worked at big companies like ServiceNow, Oracle is another one they worked for. So they worked for pretty reputable companies. So I'll give that a yes. And they're obviously doing something right if they're growing the company over 100% of revenue year over year. So it looks good to me. So overall, we have a score of 11 out of 13. However, that's not going to be considered a buy because we're looking for 13, right? Oh, I'm sorry, I did this wrong. 11. It's 11 out of 18. It hit 11 out of 18, but we need 13. So unfortunately, I'm going to give Snowflake a pass. I would not be buying this. I'm glad the valuation came down though. It's where it should be trading probably. It should be trading around $200. So yeah, but that's all for today. And if you want to see me do a video on any certain stock, comment down below and I will do that. And don't forget to subscribe if you're interested in getting some of my prizes I'll be giving out once I hit 1,000 subscribers. So thank you for watching, and I will see you in the next video.